Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end.
Before we begin, certainly want to acknowledge the reason for the season. Whatever you may practice, certainly want to wish everybody happy holidays. And keep in mind that this is a time where we do come together. Hopefully, having some place to go is home, so hopefully you have a home. Of course, home is where the heart is, and having someone to love is family. Having both is a blessing. So whatever you celebrate, hopefully you'll be able to get together with your family. Remember those who have gone before us. We're all missing family members, but also being appreciative to what you do have and who is still with us. I myself am moving into my new house next week. That's right, next week. Closing was supposed to be this week, this past Wednesday, the 21st, but due to a lending issue and not meeting a 24-hour window here in North Carolina and their rules, it's been pushed back a week because the seller couldn't do it on Friday and the courts had closed on Monday and Tuesday, so it ended up being pushed back a whole week. My point being is that I'm in a hotel and I told my kids, we're going to celebrate Christmas next week. We'll be a little late, maybe a new family tradition. However, we're going to spend time today. We're going to be appreciative. We got grandparents coming in early next week also to help with the move. So I'm appreciative of my family. I'm appreciative of what has been given to me, and I'm blessed, completely blessed, overwhelmingly blessed. And I feel, it is what it is. So we want to make sure that, we understand that there are plenty of people without homes, plenty of people missing their family members. We have troops overseas. We have so much going on in this world that take this time, again, whatever you celebrate, to just be appreciative of the loved ones that you do have, that you can hug, and you can tell them how much you care about them. And of course, wherever you may be, home is where the heart is. That being said, let's take a look at the week that was. And we can see that all three major indexes, the Dow Jones, the NASDAQ, and the S&P 500 all rose this week, putting the Dow Jones up almost 6.5% there. The NASDAQ is still down about 1%. The S&P 500 is flat. This week we saw that the market, S&P 500, rallied 3.5%, which allowed it to come up to being flat for the year, although the NASDAQ is still down. So as we approach our last full trading week of 2011, we'll see if we can get that little Santa Claus rally to finish off, getting all three major indexes to be positive for the week. We'll look at overseas. There really wasn't much going on. No real Euro news. We did see some positive economic data coming out of Germany and Spain, but not much going on. As far as corporate news, the thing that caught my eye this week was some of the takeover buyout talk about REM. And I know when I first started trading options many moons ago, REM was, one of the big things. And REM used to be a part of my review of market leaders. But as it gets down here to $13, I read an article this week that said that REM is below its blue book value. Yes, I'm a Mac guy, and this is truly a statement to the power of the iPhone, the iPad, and what the iPad has done to the market. We know HP took a big hit on their WebOS tablet And RIM also took a big hit and a charge for their playbook that's not really working. And what we're seeing is that if you're going to buy an Android, the consumer are saying, we'll buy an Android if it's really cheap, meaning the price. And so most Androids are being sold for a loss, including the Kindle. Amazon Kindle is being sold at a loss, but their hope is that you will buy into the Amazon experience, the Amazon store. Sure, I'm a Mac guy. I understand the iPad, iPod, all about the Apple experience and iTunes and the App Store. So you have a choice, but if you're going to spend that amount of money, most people are choosing iPad. And it's not just the tablet market they're affecting. Many people are giving up computers for tablets, and many markets like flight simulators and healthcare are going to the iPad for solutions instead of some clunky machinery that you have to buy. So the iPad really has revolutionized many markets. Call me, a pundit for Apple products, but it is what it is. As far as economic data, we've had, of course, on Friday, the final passing of the 2-month extension of the payroll tax cut. Keep politics out of it. Anything that allows people to keep money in their pocket is a good thing. Q3 GDP came a little bit lower than expected, and initial jobless claims and missing sentiment came in better than expected. Again, I know what some people are saying. Jobless claims, some people just have given up looking for work. That may be so. But again, we have to recognize that the economy is getting a little uptick, and hopefully it will continue to do that. Not for political benefit, but for the benefit of all Americans. As we look into next week, again, our final trading week of 2011, we can see that there's no real earnings. I think there's only 3 the whole week. As far as economic data, the market is closed Monday for the Christmas holiday of Sunday. We do have consumer confidence on Tuesday, jobless claims on Thursday, and none on Friday. And some markets are going to be closing early on Friday, and many traders are going to be taking off Friday for the New Year's Eve holiday. So it's going to be interesting to see what we have there. Let's go ahead and pull up the charts and take a look. We're moving on to the S&P 500. Those of you who are sticking around, I appreciate it. I understand that there were some microphone issues, but I think they're fixed now. So the first portion there was a little bit loud, but they should be fixed now. So, our theme here for the month of December has been the 200 moving average and what's going to get us through it, what's going to be our catalyst. And so you can see here, we tested it, failed, tested it, failed, tested it. Here we are at the beginning of December now. And then we failed. Nice little uptrend line we've got going on here. And now we're back testing the 200 moving average once again. Now we're in a range now of about 1220 up to about 1300. So the question is going to be, where are we going from here? Our indicators are starting to head up towards overbought, so we'll see. And it's easier to see if we zoom out here to the weekly. And come on in. It's real easy to see what we did here this past week. We took out this completely red candle. And again, we're starting to look back towards these October highs. You could say we have sort of a mat hold, rising forward pattern going here, gap up, pull back, and now we have taken out these highs. So technically, this would be a very bullish pattern. However, again, it's the last trading week. People are on holidays. Maybe we'll see a superficial light volume up to the 1300 price level. Right now, we don't know. We'll certainly see what happens with consumer confidence. I'd be surprised to see how many people remain after Tuesday's consumer confidence. But, again, that may be our little catalyst, a superficial light volume move up here. And then we'll have 2012 to test whether or not we're really going to go back and test the highs, or will we head lower. Now, when we come out here to the monthly, we see a beautiful rally. And again, we can kind of see that we're taking out this November candle, but the high of that candle is 1277-ish. So that's really what we really need to break to really say we're going to retest the October highs. Until then, we're still within the whole candle of November. Switching over to the NASDAQ, going back to daily, we can see a bigger range that we're going through. We can continue to see our uptrend line holding up. So for both the NASDAQ and the S&P 500, we have an ascending wedge. Resistance 1300 for the S&P 500, 2740 is for the NASDAQ. But what we can also see is that we know the NASDAQ led us for a while, especially in our up move from 2009. But now we can see that the NASDAQ is not testing it. Now it's going back up there, but it's not at the 200 moving average like we see for the S&P 500. So it's lagging behind just a little bit. And our indicators still have more in the middle and heading up than they are quite at overbought. So there's still some room to head higher. Coming over here to the weekly, zooming in. And we can see now this one has not taken out the last week's candle, but it's trying to. So again, more of that weakness, but it's easier to see this ascending wedge pattern that we're looking at. All the way out to monthly, zoom in, and we can see again that we have plenty of room to go. As a matter of fact, we got to get all the way up to the top to take out the November channel. So we kind of have a doji with a doji for November and December. Okay, so we see where the market is testing the 200 moving average. We're going to look at some of our leaders. Here we are starting off with Apple, looking at the daily chart here, and we can see Apple is back in its range of 390 up to about 410. Nice little rally this week, and we kind of talked about that this is where in the past we saw some buyers coming in. So nice rally in the middle of that range right now. And so, it makes sense to go test 410. But, I don't think in the next week are we going to be testing the highs for October. And keep in mind in January, Apple has one of its conferences and obviously earnings at the mid-January. So there's certainly a catalyst there if we're going to get above the 410 price level. Nice move on Apple. Apple definitely bullish. Amazon. Well, you can see, not a great chart here for Amazon. Nice move up, and now we're just kind of falling off here. Sort of a falling three pattern here as it broke the last support level of 180 here, and it did that this week. Creeping into the picture is the 500 moving average. We don't always see that. We can really see on the market profile the sideways price action that these days kind of shown. So we broke it. Must have been some catalyst, big volume here to get us to break that, and now we rally back up. What was once support broken now becomes resistance. So now what's going to get us above 180 if that's for the bulls? But Amazon, I would say down. Apple up, Amazon down. Google. Zooming in on Google, we can see the good news about Google is we got up, we found a range, came down, tested the 200 moving average, back up, and again, what was once resistance is now support as we continue to move sideways. So 618 is acting as support, maybe 636 acting as resistance, sideways action. Google's sideways to up. Goldman Sachs, certainly a downtrend. Hard support here around 87. We continue to put in lower highs with this. So this is really a descending wedge. We could come in here. Draw something like that. We got a descending wedge with, again, 87 being the support price line. Sorry about that little phone ring there. So a descending wedge here on Goldman Sachs, at least the 87.50 is as a bottom. As long as this holds up, we can say sideways. But with these lower highs in, we're definitely going to say sideways to down. Next we have IBM. Zoom on in here. Nice little channel here, 175-ish, 176-ish, up to about 190, even 195. Nice little range we're in. We're testing the bottom of that range right now, although we did get a little move up here on Friday. So IBM, I would say sideways. So we've got Apple up, Amazon down, Google sideways to up, Goldman Sachs sideways to down. So we kind of got 2 up, 2 down. Sideways here for IBM. Intel.
Hello?
Apparently someone keeps calling and hanging up here. Intel sideways to up, although we're broken out of this immediate range right here. But again, as we zoom back out, longer term, we're up. And as long as we're above, I think 24, that's why I feel comfortable about the sideways to up. But definitely sideways on Intel. So IBM, Intel sideways. MasterCard, our best chart. Clearly, uptrend. Most recently, kind of sideways, kind of like Google. As long as we stay above 370-ish, we're sideways to up. Netflix, just like Goldman Sachs, look at that drop off. Remember, Netflix $300 this year, all the way down here at $60 now. So we got support around 61. We've got resistance at 72. It's testing that resistance right now, but I'm still going to say sideways for Netflix. And we'll finish off with Priceline. You can see the huge range. We've been talking about that huge range. And then we zoom in and we can see we tested it, coming up, hitting the 50 moving average, starting to get towards the middle of this range. Look at the market profile. And you can see that support at 445, coming up here to a little point of control, but also resistance. So we need to stay above 478 and get above this 50 moving average, so we can at least try to go test this 200 moving average. I'm going to say sideways for Priceline. So Apple, sideways to up. Amazon, sideways to down. Google, sideways. Goldman Sachs, sideways to down. IBM, sideways. Intel, sideways. MasterCard, sideways to up. And Netflix, sideways. And Priceline, sideways. So, again, what's our catalyst? What's going to move us up? Let's check out our last sentiment indicators with oil, the dollar, and gold to see if we can get any indication as, again, we close out 2011. Okay, so we're going to finish off here with our market sentiment indicators, starting off with the dollar. We went up and tested our resistance here, 81.20. We hit that. We're falling off just a little bit, and so we'll watch to see what happens here at 79. A little sideways action. We can really see that on the market profile. Whoops. There we go. Really see the sideways action here on the market profile. But again, what's going to be our catalyst and move us one way or the other? Very nice move here in December for the dollar. Dollar's definitely bullish. What about gold? Well, if the flight to safety is not in gold, we can see that the dollar is stronger. What does that mean for our gold? And we can see that it did try to bounce a little bit here at the 200 moving average. We got a big push through. But what we can also see is that it came up and tested it and failed at the 200 moving average, and now we need to see 1600 hold up as support, or we could definitely make a new low here. So sideways action, a little move up here, failure at the 200. Look at the market profile here, definitely some sideways price action there. So goes a little weak. Finishing off with oil. We know, we've talked about it. Here's our 102 to 96 price range. We zoom in, beautiful month of November. December has been sideways for crude oil. Kind of broke through the 200, coming back up. We'll see what happens once it gets back up here to 102. If it will go all back down to test 96 and 90 again. As we come to our education spotlight, we continue to talk about the importance of reviewing our trades. And that's really the final step. It's not just finding the result of the trade. That's not the final step. The final step of any trade is taking the time to review and analyze what did and did not happen. Did the expected outcome happen? If it didn't, why not? Were there any external circumstances unseen or seen that you missed? Did you miss the entry? You need to take the time to evaluate the trade and make sure that you followed your rules and your system to the T to make sure that, again, your current system is working in today's current climate. A trade is not completed until you've completed this final step of reviewing and analyzing the trade. Again, we've got some big things planned for 2012, so make sure that you like, subscribe, or comment on our videos here on Facebook. We have a page, Are You Financially Literate, with Mike on YouTube and Twitter. Take the time to comment and subscribe. We're going to have some really cool things for you next year. More videos, more feedback, more engagement. Really want to give quality to our subscribers. We have our 5-part video course on high probability trading. It really helps you frame the market. We've got about 5 videos, all about 10-15 minutes long, to help you understand how you should frame the market, the high probability trades. We hope that gives you a gauge of who is our coaches and how we can help you develop that trading plan, that trader's mindset, to where you go from beginning to end and accomplish the end by reviewing each trade. We do have a video course for you that has 3 components. Introduction, where we go over all of trading, technical knowledge, chart patterns, money management, psychology of trading, all these different facets of trading we included in that. Then we go into the specific trading plan components and how you should put those together, and we have high probability trading sets for you. And we're only charging $99 because we think and we know that it's not about the system as much as it is the mindset. So we want to make sure that you can enroll in our coaching, and we don't want the system to cost more than the coaching. If you're trading futures, why not try our futures broker? Intraday margin low is $300. 20 free trades if you sign up through us. And a chart package that works both on PCs and Macs. Run your scans and find the latest and greatest fast moving stocks. And as we just said, it's not about the system or indicator, as it is about the trading mindset, so that you have the psychological capital to pull the trigger on each and every trade. Thanks, guys. Happy holidays, and I will see you next time.